Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. Online Trading Academy, teaching people just like you for over 25 years locally here in Minneapolis since, 2010. Teaching people just like you how to trade and invest, whether you're looking for short term income strategies or long term wealth strategies. One of the great things about the show here, Al, is we've been on the radio here locally for many, many years. I don't know. I can't even remember how many years. I need more than one hand or two hands to count that. But that's the great thing is we've been introducing these concepts to our listeners here for several years, and we've had a lot of people coming in from these radio shows and just talking about how they've been listening to the show for years, and now they're finally taking action. And that's what kind of bums me out a little bit because people procrastinate sometimes
Mhm.
too long to where it's never too late. But you know what? It's better to start something sooner than later if you have financial goals. And that's why we have these investing classes that people are coming into from the radio here and want to see what are those different techniques and strategies to make smarter investing decisions. So just to come into one of these classes, you can just text the word investing to the number 210 210. You'll receive a text back with a couple days that in times that make the most sense for you. We'll make sure we get a call for you and get you the time and date that you need. But text the word investing to the number 210 210 if you do have goals and objectives to have hopefully a better investing future and making the decisions that you want to make in the financial markets. And in the podcast, we haven't even been recording a podcast for many years. We're already on episode 714. So, check out the podcast, Investing and Trading Live, on Apple Podcasts, iHeartRadio, and Spotify. Make sure to smash the like button and subscribe so you can get updated when we do the show here weekly here locally in the metro area. But as I mentioned, we had some stock picks that we had to get into.
Mhm.
Unfortunately, it took to the last segment to get to it because we're having too much fun. But we talked about Nvidia. This was several weeks ago, Al. And one of the key things about that first segment we talked about is having patience.
Right.
Patience in the financial markets. And we talked about Nvidia and a potential buying opportunity near the $200-ish mark area. And price just hasn't came back there yet. So, like I said when I was on the airplane, when someone asked, well, "What are you going to do with the stock? Are you going to buy or sell it right now?" I said, "I don't know, but I'll tell you what I'll do when it gets down there." And that's the same thing with Nvidia. What are you going to do with Nvidia right now? I'm going to do nothing, but I'll tell you what I'm going to do with it when it gets down to an area of demand or up to an area of supply. And that's the key in the financial markets is being patient. So these trades, you can have opportunities sitting and waiting for you,
Right.
opportunities, so that way you don't have to be at your computer for it to execute. You can all actually set this up in advance. So we talked about the Nvidia one a few weeks ago. Silver also has a potential demand area as well, and that's the kind of not necessarily a concerning one, but it's showing strength in the commodities, gold and silver, which are typically quote unquote safe havens.
Right.
Well, could this bring more declines in the stock market? Who knows? But there's a potential demand area around the 22. Well, I'm looking at the SLV, or actually the silver commodity, 22 area, 2260 area of a demand area. But these are opportunities that I'll tell you what's going to happen or what could happen when it gets down there. So we don't want to just buy for no particular reason or sell for no particular reason. You want to have that plan in place, like you talked about in that first segment. Another stock that we've been talking about for several months here is WWE, World Wrestling Entertainment. And the sale of WWE really
Mhm.
talked about this past week to, I believe it's Endeavor, the same company
Right.
that owns UFC. And this stock really has soared ever since then. It was at around a low of 82.47 back on the 3rd of April, and now getting up to close to $100 per share with World Wrestling Entertainment. So who knows what they're going to do with that? They might close it and create a new ticker symbol, essentially a new stock or a new
Mhm.
opportunity there. But that's the keys in these markets is there's opportunities out there every day, but you have to know how to do that. We talk about steps in trading and investing. Al, can you talk a little bit about the steps of trading and investing? A lot of people think you got to go buy something or sell something right away. how do you have a plan in place to have be confidence in the markets?
Well, as I mentioned in that first segment, you have to have patience to be able to wait for the right setup, the right scenario. And one of the components of that scenario is one of the things you just mentioned before, which are demand zones.
Hmm.
And what is a demand zone? That's an area where we have seen institutional buying activity in the past, and based on how we've identified it, we're as close to 100% as possible sure that that is going to be repeated when the price comes down into that demand area. So what we're looking for is not necessarily quantity. I mean, there's some people that think they have to make 10, 15 trades every day or every week. That's not the case. What your goal should be is to identify just quality trades that give you the opportunity to have the odds in your favor of that being successful. And that's the key. If you want to have more successful trades than unsuccessful trades, but also part of a successful trade is the amount of profit that you can make. Are you participating in the majority of the potential profit, or are you getting out too early or staying in too long and having it taken away? Those are all components of our core strategy, which shows you how to identify where the institutional activity is, whether it's a demand zone where there are buy orders or a supply zone where there are institutional sell orders. Those are points at which you could have turning points in the movement of a particular asset. And by the way, it doesn't make any difference whether you're trading stock or options or futures or the foreign exchange market. Those zones are the same. The demand zones, supply zones. That's what's going to determine, we believe, with a high degree of accuracy, where the greatest movements are going to take place with the highest profit potential, but with the higher odds of it working in your favor. If quality trades benefit you, quantity trades just simply benefit the financial advisors in the brokerage industry.
Why
And
is that so important now? Because when you have that plan in place and you can remove those emotions, why is it so important to be able to do that? Because emotions are key in the markets, and as we talked about in that, I think it was the first or second segment with TV and
right.
internet, they bring a lot of emotions out. Why is that so important to eliminate that?
Well, fear and greed. Fear and greed are going to have you doing the opposite of what you should do. I think everybody listening would agree that you're supposed to buy low and sell high, right?
Hmm.
Everybody knows that, and when these workshops, we often ask that, and everybody says the same thing. But the reality is, the public, the retail traders, pretty much do the opposite because of greed and fear. Warren Buffett is a good example of somebody who has really identified how to do this properly. And Warren Buffett will tell you, you should be greedy when others are fearful and fearful when others are greedy. And what he does is he waits for good companies to be driven down into the bargain basement so he can get in at a good price that gives him good value and good profit potential. Well, the problem is when we see the market moving up, for people that haven't been involved, there's something you probably have heard of, FOMO, fear of missing out.
Hmm.
You see something going up, you don't want to miss out on any more of it, so you jump in. That's typically what happens at the peak of markets. The peak, just when markets are ready to roll over, that's when the equity ownership by the public increases, which means they're buying high. And at the trough, when markets have crashed and they're getting ready to turn to go back up again, that's when we see the equity ownership of the public go down, diminish, which means they're selling. So they're selling low. And the reason is, if you have a portfolio and it goes down in value, every time you look at it, every day you look at it, or every week it's going down in value, at some point in time, that fear is going to take over. You're going to say, you know what? If I stay in this any longer, I'm going to lose everything. I have to get out. That's selling low. And the problem there is that you're letting those emotions control you. First of all, you shouldn't have been in that asset or that portfolio if it has been going down that much. That's because you don't have a risk strategy. And the same thing when something is going up in value. Things don't go in one direction continuously without some kind of pullback, some kind of correction. So we want to identify those areas, and that's going to give you the best opportunity of something working in your favor.
Yeah, and there's a lot of great concepts there. And being calm in the financial markets, waiting for price to come to you, and removing those emotions. And that's why I brought up that Nvidia stock that we talked about several weeks ago, is because you want to wait for price to come to you. And just to paint a picture on how trading and investing kind of looks like. So it's Easter weekend, right? And there's Easter egg hunts. And how does that usually happen? You have all the kids running around frantically, trying to get as many Easter eggs as they can, just going as quick as they can. And that's kind of like the public trading. They're trying to go
That's
get them
good.
as fast as they can,
Yep.
go get as many eggs or get as many stocks and buy, and just do all that stuff, creating emotion and excitement, right? While the parents are watching and they're waiting for the kids to bring those eggs back to them, and maybe they'll eat them later, whatever that may be. But or there's money in the plastic ones, whatever you do at
Right.
home. So then that's the banks and institutions. They're waiting for the public to just go buy and sell, create volatility. And there's kind of like what is that? The skunk, Pepe Le
Oh, Pepe
Pew,
Le Pew.
just kind of prancing around while the other one's going super fast. It was Wile E. Coyote or whatever that may be, and they're just waiting for their opportunities and how to make the right decisions. That's what trading and investing is. Come into one of these investing classes and see how these actually work. Al, you hit some OTA tip of the week every single week. Let's hear it now.
Okay, you know what, Josh? Unfortunately, too many people just accept where they are as where they're meant to be. If you're not happy with where you are and you want to make a change, well, look at it. It's clear that financial issues and shortfalls are a result of a lack of financial education, a lack of knowledge. The markets and the financial opportunities capitalized by Wall Street, those are available to everybody, as is the education to be able to take advantage of them. And you want to make sure that if you want to make a change, you have to take that first step. You have to take action.
Text the word investing to the number 210 to start making that change for a free investing class. As always, same time, same place next week. Until then, retire.